Hello, everyone. Welcome to the Sunday live stream, and I'm joined as ever by my buddy Jerry. Jerry, how you doing today?
I'm well. Hey, everybody. I'm broadcasting from the capital city of San Jose, Costa Rica.
Not a bad place to be. I like that background. It looks pretty nice.
Sometimes you get lucky, Rob.
Yeah, tell me about it. I mean, I bought Aster like a week ago. So anyhow, what we're talking about today is we're taking a look just at the theory of the super cycle and what that means, how far it could go. And then also, as I read my comment section, I take a look at what people are saying, of course, and they're like, yeah, this isn't a super cycle. This isn't even a cycle. This cycle sucks and it's awful, and where are all the profits? And we'll take a look at that because there is something to be said for minimization of profits. But before we get into it, if you're looking to follow Jerry, if you're not already, there's a link in the description for his X account. He puts out great content over there, so check him out. So today, the super cycle theory. Jerry, you've been around since how long? 2017, 15?
The very end of 17 hooked me like a salmon on a line.
Yep. And I remember in 2017 of calls for, Bitcoin to 100K, Bitcoin to 250, Bitcoin to a million. It just didn't matter. And then there was some small rumblings of super cycle back then. Then in 2021, we got more of this theory of the super cycle. And we talked about this yesterday as far as price predictions and elongation of cycles and super cycles. But now it's starting to rear its head yet again. And I want you to listen to, this is Tom Lee from Fundstrat, also the CEO of BitMine. They just picked up a fresh $1 billion or roughly of Ethereum recently. But he was on CNBC and he said the same thing again and why it is. So let me just make sure everybody can hear this crystal clear and perfectly. This is Tom Lee, again, talking about the super cycle and why people are essentially impatient. Just take a listen, about a minute or so.
Number one, I think it's always really healthy to see corrections in a super cycle, but I do think it's really difficult for someone to actually ring the bell at the top. And in fact,
always.
Like if we look at Palantir or Tesla or NVIDIA, I think that there have been, 25 bell rings at the top at every waypoint along the way. To me, I think the real test is going to be that we see a day where investors are convinced there's absolutely nothing that is wrong with the thesis and it's bulletproof, and yet stocks make announcements and they go down and companies actually have negative returns. I have not seen that yet. In fact, to me, it's reflexive to see that every time markets flatten out after posting gains, we have a lot of people declaring the top. To me, that's a really healthy sign that there is very little conviction about this bull market. And I do think it's healthy to actually see skepticism.
Yeah, I think it's healthy to see skepticism. But again, Tom is here saying that, look, this super cycle is happening and we see how it's coming in. People are continuing to say that's the top, and that's the top, and that's the top, and that's the top. And he could be onto something. But Jerry, what do you think about the super cycle theory? I know people have been DMing me about Raoul Pal and talking about the business cycle and how he's explained that now we are in a 5-year cycle instead of a 4-year cycle. So just Jerry, just to get your opinion, what do you think?
Well, so cycles are based on something, right? There is some fundamental underlying cause of a direction, either to the upside or the downside. And so I try to understand what foundationally or fundamentally could be driving either direction. Yeah, what's happening? You and I have spoke in great detail in many different shows about how the cost to borrow money is a foundational element to move a market in one direction or the other. For instance, if it is cheaper or costs less to borrow money today than yesterday, those who need to borrow money will borrow money today as opposed to yesterday because it's more cost effective. Maybe the cost of capital has come within their particular parameters. When people borrow money, they do things with that money, right? They take on that debt. That debt might expand their business. That debt may purchase an asset. That debt may be used in the economy to help bolster up assets and things of that nature.
Right.
So it's also true on the flip side. So what to me drives a super cycle or any cycle? It's really about debt, right? And so when you look at business cycles, like I'll just quote some Raoul Paul, a relatively well-known macro analyst, he believes the extension, the period of time that is elongated in the business cycle is predicated on a debt cycle. When debt matures, what that means is, for instance, let's say 5 years ago, I took out a $5 million loan. And that $5 million loan has had payments that have had to be paid, but the bulk of it needed to be paid at the end of the 5 years. Well, if I don't have that surplus, I need to collapse assets to pay it. Therefore, I would end that 5-year debt cycle, right? I would be paying on it. That money would be doing stuff in the economy. And when the debt comes due, I've got to pay the bill. Well, if you don't have it, what do you got to do with it? You've got to sell assets. You've got to liquidate something to make good on the debt. The only people that don't need to follow this particular process are generally governments that issue their own currency, i.e. the US, because they will just replace old debt with new debt without the actual liquidation of other assets. But that's a story for another day. You can, so if you understand that little debt cycle, then you can start to understand the foundational elements of the business cycle. Businesses are secular in there. They borrow money, they put money to work. That money either generates revenue and cash flow, and they're easily able to pay off their debt, or it doesn't. And if it doesn't, then they have to take other drastic measures to liquidate that debt. And it's really an on or off kind of thing. And not all companies are in the same place at the same time having to do that deal.
I got it.
Okay.
So yeah, that makes a lot of sense. Thank you. So when we're moving into this cycle, and I'm not saying it is the reality and it's definitely what is going to be, but let's say that it is. And let's say that the big institutions and the players and the hedge funds and everybody else is out there going, you know what? Let's just keep rolling this into assets. And then when it flows into risk assets, maybe it didn't flow into risk assets yet, maybe, but then we go into 2026, and then now it's a game of who's going to draw first, like the old Western. When you're looking at somebody going, are you going to? Or am I going to do? And then before you know it, someone pulls. Now you get a pull. And before you know it, the whole cards collapse. So I wonder then, because we talked about yesterday some things about price prediction and things like that, that would lead me to, and I'm going to skip forward to this, when in the comment section, I thought it was interesting. Satori Strand says, I would wager to say that not a single one of these people was wrong at all. Again, there's a link in the description for yesterday's video, all price predictions 2021. The entire purpose of these predictions is to get retail to bag hold as long as possible, while they, being the whales, the strategics, the institutions, the big money players, the hedge funds, the whatever else, while they scale out strategically. They're wrong. They're billionaires doing their jobs, and they do it every single cycle. So I guess it really comes down to this. If it does move into 2026, and I still don't buy it, I still don't believe it, I'll believe it when I see it, wouldn't it be something to take profits now instead of waiting until then? And then maybe, like people are always talking about this, Jerry, they're like, I'm going to front run this. I'm going to front run this from the big players. Maybe the big players are just waiting to front run us. And it's a big game theory. Like, you know what? Well, we know that debt cycle, everybody heard about it. Now we're going to get even earlier. Jerry, thoughts on that?
Okay. I don't know exactly. That could be true or not true. What I'm seeing in context to what we're talking about cycles in this particular quote unquote super cycle is the relationship chronologically. So the time from COVID to now, right? There was a poop ton of debt created during COVID. I believe somewhere in that tune of 70 trillion globally.
I could say global, sure.
It was relatively unprecedented. Let's put it that way. Now, good for us that the debt established during those periods were at much lower interest rates than the debt that is established to acquire today.
Right.
It doesn't absolve that debt. So that debt that was formed back there needs to be returned, right? It needs to be churned over. And so what I'm really thinking is that we're going to, let's just put it into what we'll see in markets. I think we'll see a continued relatively gradual incline in market, and we will have a come to Jesus, a much different cycle next time as a result of the churning of debt.
Yeah.
Debt is going to be a lot. The debt that was established during the COVID era is going to be a lot easier to refinance today than the debt that's taken from now forward 4 or 5 years from now.
Yeah, we'll see if it pans out. I heard a lot of great theories last cycle too, and they didn't pan out either. I mean, it seems reasonable, it seems plausible, and it's something I think we should have in our back of our heads. But when we start seeing, like, I don't know, certain indicators start to pop off, extreme greed is out there, first of all, and then when you're just random people start texting you again, hey, what's up with this insert altcoin here, and tell me where can I buy it. Or we just take a look at like the basics, the MVRVZ score, or the 12 multiple, or any kind of like long-term holders 2-year hold pattern. We can just take a look at that and say, well, maybe this is just a little bit toppy, and maybe I should start taking some profits. It is what it is. But I think the bigger question, the bigger statement is, if we're talking about a super cycle, can we define that, what a super cycle actually is? And some people, I heard there was an analyst, I think it was an MSNBC, and he talked about, well, actually, he was talking about the S&P 500. And he was saying, S&P 500 is essentially in a super cycle. I mean, if you take a look at just how things have gone over time with some, and he would say, minor pullbacks. What's a minor pullback? Well, in the traditional finance world, if you're talking about a minor pullback, it's like 0.1%. But for him, he's like, well, what if it goes back, 5, 6, 10%? That's not a bad. And again, it's just like the opinion of people that are out there. 10% for the crypto world, that's a Tuesday. Nobody cares about that. But if we just kind of zoom out like we always do, and I'm not saying this is the reality, but you take a logarithmic pattern all the way back to 2013, this is kind of what the cycle have been in 4 years. And this looks all fine and dandy, and people might try to gaslight you on this one, but make no mistake that in 2013 to 2015, we were down over 87%. In 2017 to 2018, we were down 85%. And in 2021 to 2022, we're down 77% from the all-time high. And that's just Bitcoin, not altcoins. So when people say, you just got to zoom out and that's a super cycle, I'm going to call bunk on that, because it's not. It's a massive depreciation of the valuation of Bitcoin and altcoins, and we'll go from there. So we'll see if it happens. And then, of course, you can take a look at gold, and people might make the same thing. But here's an interesting little tidbit of information. The ETF for gold was sometime around 2004. And in that point, it looked like what people would consider like a super cycle, up to here and then here. But then at a point past the Great Recession, you started to get a top around 2011, 2012. Now look at this price action for gold. And this can happen anywhere, any asset class. You were at 1,700, and then you dropped and dropped. And it's not so much how much you dropped, but if you were buying over here, you had to wait until, good God, 8 years.
2020, yeah.
Yeah, to get back. So again, when you hear super cycle and people are talking about it, it could work out. I'm not for sure, but I'm still going to take profits and move myself along the continuum. Jerry, where am I wrong here?
I don't think you're wrong at all. And I think one of the greatest realizations I've made over the last X amount of years trying to study finance and economies and monetary policy and understanding some of these things is that what I thought was a real science, quote unquote, economics, is actually more art than it is science, because there are so many variables. Even sophisticated AI is not going to get it right? I mean, that's how many variables there are that can upset any potential thesis or equation. So with that being said, if I can try to understand some of the fundamental elements of these things we'll call the economy, then I can act accordingly. But my days of thinking that I made the right thesis and going all in, I'm over. I'm not doing that anymore, because every time I've been not 100% right. I've always been, I've never been 100% right. And so
that's crazy. Not 100%.
The greatest lesson that I can share is that this is more of an art than it is a science, and just understand that and act accordingly.
That's exactly how to do it. So yeah, so I guess, and everybody's goal is different. And that's why everybody in the comment section, people are like, I'm never selling because this is going to my kids or grandkids. Great.
Okay.
Yeah, some people like, you know what? Like Steve-O is like, I am selling like crazy because I'm not going to round trip my bags again. Great. And everybody has their goals and what they want to do, and they're at a different point in their life. But
and they're all right. They're all right, every one of them.
Yeah, exactly. Exactly. It's like when people say, I have the greatest dog on the planet. And you're like, well, of course you are right. Everybody's right, because that's for you. So just going back and touching on like SUPERCYCLE and Tom Lee and things like that, video we did yesterday, we took a look at price predictions back then, and every single person got it wrong. And I'm not talking like a little wrong, I'm talking like a lot of wrong, for the most part. And I had to take a look at Tom Lee's predictions. I don't know if you guys remember listening to Tom. I remember listening to Tom Lee on CNBC, I mean, years and years ago. 2023, I think, is the first time I saw him. But here's his price predictions for Bitcoin. Now, Ethereum, he's got some interesting plays. I think he just said that Ethereum could reach 20,000 this cycle. We'll see. But I had to ask Grok, I'm like, what's the price prediction for Tom? So in 2020, he was actually right. He said that the price, this is back in 2020, he said that in 2025, at the start of 2025, Bitcoin would be 100K to 150K. So back in 2020, he predicted it correctly. I don't know how he did it. As a good guess. Or maybe he knew something we didn't know. I don't know. In 2021, he said it'll be 100K at the end of 2021, which is what everybody else said. And at the end of 2021, it was 46,000. Now, it did go up to 67,000 at one point, but that was in November. But the end of 2021 was 46K. In 2022, he said by the end of 2022, it's going to be 200K, and it was 16K, not even close. 2023, he said by the end of 2023, it'd be 100K, and he was halfway right. It was a 42. And then 2024, he said it'll be 150K by the end. Nope. 2025, he's saying 250K, and then eventually it'll be 1 million. So again, it's just, I like price predictions. They're great for the hopium effect, and that's great. People need hope, but I mean, don't base everything onto it. And that's what we talked about yesterday. Just take a look at the indicators and make a more informed judgment instead of going, there's no way that I'm going to sell my Bitcoin or whatever at 67,000 because all the analysts said 100K or more. Jerry, thoughts?
Again, back to understanding. I learning about supply and demand and fixed asset elements, which are relatively a new thing in the world of asset acquisition in the investing world. If you know there's only ever going to be 21 million created, and you know that somewhere in 2030, the last 1% of the supply will be stretched out over 100 years, then it's pretty safe to say that if demand increases and supply stays static, the asset will appreciate. That's a pretty safe bet. That is almost economy proof, right? If the demand increases, that's the only variable you need. So if you are holding a bag in that context, then your job or our job is to elicit more demand. And then all the other things will work themselves out. Now, I want to make one comment about Tom Lee, if I can. I've never stood by his predictions because I'm not a big prediction following guy, but I will tell you one thing that he was incredible for me personally, that touched my life in a way of my education, my financial literacy. And that is, he did an hour-long presentation at a summit of some sort, and he went over the demographics, right? He went over how demographics play a role in asset appreciation and understanding how culture affects your investments, right? And he did this whole thing, and it started with the silent generation, the baby boomers into Gen X, obviously millennials, and looking at and trying to forecast how these future generations will behave relative to the things that we already have benchmarked in history, the silent generation, the baby boomers, etc. And that was really informative and helped shape the way I'm looking at so many things in my life, is trying to understand the demographics, because if I do, then I can understand market sentiment, potential market behavior based off of the people in the economy, not other factors in the economy.
Yeah, well said. And then baby boomers, they pretty much have been directing traffic as far as the economy since, I mean, it was baby boomers 1946, huh?
Easily since the 80s.
Right, because like
really came into power in the 80s, that Reagan push.
Right, because they were well, baby boomer generation between like late 1940s, early 1960s, somewhere around, and that's like their hub time frame. And then as you go from there, you see like which businesses were thriving. Well, of course, in the very beginning, baby food and diapers. All of a sudden, that took a huge big jump. And then I saw this in another piece where it was like bicycles just took off because there were so many kids that wanted bicycles, so then off they go. And then of course, as he talked about, in the 80s when they got to voting age and they started to get into real estate, buying up land. Before you know, you have that. And now you see like what are the biggest types of industries that are doing extremely well? Well, you see, because they're getting older, pharmaceuticals, weight loss, and a whole host of other things that elderly people need. Also, if you're taking a look at like retirement homes, if you take a look at that, that's a leading indicator or a leading type of business that is really expanding, especially here in the States because of the baby boomers themselves. There's a very boring explanation for like baby boomers, but you get the point. They are driving a lot of the economy. And of course, there's also this thing called the great transfer. At some point, they're going to pass away. And where do those assets go to? Well, it goes to the kids and the grandkids and things like that. And that's what everybody's kind of like going, when does that happen? So that's what it is. But just to finish up, and we'll get into a little Q&A, Atlantic had a point, and this is what I want to talk about too, is he says, take your profits. What profits are you talking about? Because it seems like people will talk about like, buy the dip and then, take some profits, knowing we're broke. And some people are like, where the heck are these profits? Because I heard in 2021, it was just such a huge, big push. And it was. You could have just thrown a dart at the dartboard and pretty much nailed it. First of all, to answer Atlantic's question, what we talked about yesterday, it holds true today. If you go to coinglass.com, there's it's an aggregate of a bunch of indicators, top 30 or so. And as far as like those indicators, they're pretty much all saying none of them have hit so far, except there was one, the altcoin season index. And people say, what? It doesn't make any sense. Altcoin season, my alts aren't popping off. Well, it takes a look at the top 50 as to how it's doing against Bitcoin over the last 90 days. And Bitcoin's been kind of flat, and some of these altcoins have done pretty well. So that's why they say it's altcoin season. So no, your 1,232nd ranked by market cap altcoin might not be doing great, but in some of the top 50, they're doing fantastic. So you take a look at that and go, okay, that's what it is. But I wanted to show you this real quick. And this is where I screwed up in equities, because I thought I was so good at crypto in 2021, which I wasn't. It was just because everybody else was going great. I got into stocks. And what did I do? I forgot the fact that you can't buy at the top. You actually have to, buy during the bear market when nobody wants to buy. So here's a prime example of like, where are the profits? Well, they're made all in the crappy times. Check this out. So this is Bitcoin. I'm not going to go over this. This has been done to death. I want to show you just Ethereum. And there's different cycles. Let me just hide these first two here. So this is from the cycle bottom to the top of whatever you would describe during that time frame. So this is Ethereum when it first came out, roughly, which is not a good one to take a look at because they went up so much. But in 2015, what is this? Oh, October 2015 to January 2018, that was the first cycle, you were looking at a 3x. Oh, excuse me. I was like a 3x, excuse me, a 3000x from, because of course it was just a new one. But let's take a look at this. Here's market cycle 2. This was back in 2018, 2021. All the gains that you can see were made, you had to buy right here. As you were going up, you could get some, but it was just the diminishing returns. And if you would have bought towards the bottom, and from, you know, for the last 2 years, 2018 to 2020, this is where you would get most of your gains, a 54x. And then as far as like today, again, here's where it all was great. You could have done this and bought up here, which I think a lot of people are doing or did. They're like, I'm buying in the bear market. Yeah, it really wasn't. And now from here to here, you're not really in too much. And we can take a look at that. We can take a look at XRP. It's the same thing. Litecoin and ADA, it's all the same stuff. Jerry, where do you fall in this one when you were buying? Were you buying during like the bear or kind of like the kind of emerging bear market where things were kind of coming up?
Well, I mean, I'll be honest. I came into the market when the expansionary period was just gangbusters, right?
Yeah.
Every news outlet was talking about Bitcoin at the end of 2017, and that drew me in, right? Now, here's where I got lucky. It immediately started in February of 2018 to compress that whole market, right? Right. And I continued to buy as it went down, 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 down. Luckily, I was dollar cost averaging, and I had enough money to keep making dollar cost averaging purchases all the way through the compressionary period of 2018. I held through that stagnation of 2019, was still holding during the beginning of 2020. And then one of the most incredible things that happened to me as an investor, but one of the worst things that ever happened to the world, was COVID came around and started a liquidity super cycle that sent all my assets to the stratosphere, right? So I went from, you know, 53,000 US dollars total invested in crypto to $1 million portfolio in the course of 14 months.
Yeah.
Okay. Now, I want to, if I could real quick, address Atlantic taking profits. What profits? I totally get that.
Yeah.
You're not, unless you got attracted to this market at the bottom, chances are you bought as it was exploding to the upside, which means you need to wait around long enough for the new cycle to come around and new all-time highs. If you don't have the patience to do that, then you're going to remain in that context of taking profits. What profits? There are no profits to take. And that's true. None of us who come in buying in an accelerating, appreciating market can take profits until the next cycle comes around. And you just have to have the patience to sit through it and wait. So time in the market will always win trying to time the market.
Yeah, it's just trying to time it is difficult, but there are some things that we can, I mean, to time it perfectly, let me say that. Time it perfectly is pretty difficult, but there are some things that we can do, right? We can take a look at, and we talked about it yesterday, CoinGlass. Ben's website has an aggregate. There's a video I've been talking about like the last year and a half of when I'm selling everything, and just watch those 3 things. Actually watch yesterday's video. And then the next thing I would say is because people are like, well, I don't have any profits. I wonder if people know their unrealized gains and unrealized losses. Because on exchanges, you can take a look at it and it'll tell you, but sometimes it'll only go 7 days, 14 days, or 30 days. But does everybody know their unrealized gains right now for every single altcoin that they actually have? I'm going to show you. There's a site. Let's take a look.
Pad and paper, children, kiddies.
Now, this is very easy, actually. I'll show you. I can pull up the correct screen. There it is. Jerry, here we are. Look at us talking. Okay. So if you scroll down from what you guys are watching right now, there's a link in the description. And first of all, let's see. You can follow Jerry. There he is right there. That's definitely a must-have link to click. The Who Got It Wrong video, which is the one where we talked about this one here. But if you scroll down to crypto tax software, and you're like, why is Rob talking about tax software?
CoinLedger.
Yeah, CoinLedger. It's because right up here, I had to beg them to do this. I was like, please just create some kind of portfolio tracker, but make it free. They're like, well, I don't know. And I was like, just please do it for me, please. And they did it. Portfolio tracking, and it's free. And what's great about that is when you want to actually do your taxes, all the information's there. So you just put your wallets in, it's read only, and it'll tell you like, look, your fart coin that you bought 3 months ago, you are in profits. This is your unrealized profits at this point. This is how much you spent. This is how much you should be able to get right now if you sell right now. And it's great. And then you can actually say, oh, well, I actually am in profit. And then you kind of go through the whole list and go, which ones can I sell today if I wanted to, and to buy into something else? Or which ones should I hold on to because they're massively underwater? So I would just definitely check that out and kind of go from there. And, oh, Jerry, there's one more thing we got to talk about before we get into Q&A. Damn it, I almost forgot. Oh, that was right, actually. It was this.
Oh, yes.
Compute. And there's a narrative that I think is going to be pretty big over the next, I don't know, for a very long time, which would be AI. And then crypto AI projects as well. But this is from Peter Gustev. He's an analyst, and he talks about how OpenAI, which is the one that's responsible for ChatGPT, has 9x'd their capacity this year. I guess this is for GPUs, and have a goal to 125x further their capacity within about 8, thus exceeding current energy capacity of the whole of India. Think about that. To get all these GPUs to work, which is what you need for AI as it's known as compute, you need a massive amount of GPUs, which is why people buy NVIDIA and other stocks. And then also there's a massive amount of a massive amount of electricity. And I think that's the industry to take a look at. Jerry, am I looking at this right? At the beginning of 2025, it was they needed a quarter of a gigawatt. By the end of this year, they're going to need 2. And by 2033, they're going to need 250 gigawatts?
It's exactly true. And that's why we founded Compute Portal, right? That industry of compute, electricity running through a chip, right? A processor powering software is the industry to be in where demand will outstrip supply for the next 30 years, right?
What's that? Say that one more time.
Okay. Electricity running through a processing chip, GPU, NPU, LPU, CPU, whatever. Running software, that recipe, electricity running through a piece of hardware, powering a piece of software is compute. That is what compute is.
Okay.
Compute as an industry has forecasted more demand than the available supply, forecasting for the next 30 years.
Holy smokes. Okay.
Right.
So, yeah.
And that's why we built Compute Portal, to help address that market, to bring supply to that market demand.
Jerry, is that in your profile?
It is. It's a matter of fact, it says right on my X, CEO of Compute Portal Inc.
Oh, there it is. Interesting. Well, check that out. Wow. So you know what? Everybody take a look at that. And then also you might want to start to take a look at what's the big winners in commodities for electricity. We were talking about palladium, I think lithium, nuclear.
Well, obviously, nuclear is really touchy in that, I don't know. So solar, hydroelectric, wind is dying down. That technology is proving to be more problematic than positive. But small scale nuclear is one of these I don't want to call it a niche market because it's not niche. Nuclear is coming back, but in a much smaller scale. So instead of building something like 3 Mile Island that'll power all of New York, their design and a lot of investment dollars are going into much smaller, where maybe you just have a nuclear facility that powers your 20-acre data center.
You know, it's a funny thing. There was a documentary on Nikola Tesla. And the way that he envisioned electricity to run was not by a centralized power figure, but it was in neighborhoods. And each neighborhood would have their own local hub and go from there. And I remember Ben and Guy after the show of NFA Live, and we were talking about, because Ben was talking about palladium, how much he was big into it. Because I mean, that's his background. He's a nuclear engineer. And he said, he goes, we've built these before. They're like mini nuclear fission reactors and I forgot the name of it. But he says, we put them in, and they're like for a small, it's not for like a city, it's not for like a country, it's just for a small subset of an area. And he goes, those were big, and then they kind of grew out of favor for whatever reason. And I'm like, I can see that coming back. Wouldn't that be interesting? Wouldn't that be great?
There is a lot of money, Rob, going into the development of systems like that.
Interesting. Interesting. All right. Well, Jerry, that was a good one. 36 minutes, us back and forth. Love it. Love the Sundays. Now, everybody, if you're so inclined, we'll do a little Q&A. We'll ask you questions, you ask us questions, and we'll answer them to the best of our abilities and go from there. All right.
Can I ask a question to the audience?
Of course.
So obviously we sit and talk about digital assets and where things are going in Web3 and all that kind of stuff. We do this every week. I'm curious how many people are changing vocations, right? How many people are transitioning from legacy jobs to new careers in these verticals that we're seeing expand, like Web3, energy, AI, things of that nature. Does anybody have? Can anybody tell us anything cool?
I'm trying to transfer out myself. Stop being a YouTuber, because the AI is going to take my job pretty soon. Dude, I'm telling you, that is a fact. I saw it was an AI generated YouTube channel, and it was Elon Musk who was AI generated, and it looked like he was in a green screen, right? And they made it look like that, but it was AI generated him, and he was talking in that that weird AI voice, and it had like a couple 100,000 views. And I think to myself, I'm like, is that because that's real people who are viewing that, or did they make a bunch of bots to view that to make it look like this is a great channel? And people are like, wow, it's got, like me, I'm like, that's got 230,000 views, and it's only been 3 days. What's going on? You'll never know, right? That also is like, that would point to the fact of also, different crypto products that are out there. Like, wow, they have that much transaction volume. That must be a really great chain. Is that really? No, it's all bots. So who knows? What do you got, Gary? What do you got, Jerry?
I can actually speak to that. You made a statement, you'll never know.
Yeah.
Okay, guess what? You will know. And do you remember your friend Nathaniel Minton at Flux Point Studios?
Nate the Great, yeah.
Nate the Great. You know what Nate the Great has done? He's developed the first of its kind that I've been able to find, and it's called proof of inference. In other words, it's a traceable, immutable record of where and how AI was used. So if you create a video, right, and use ChatGPT, and it's ChatGPT version 76.32x, and it provides X answers.
Yeah.
Through this protocol, this proof of inference that he's doing, it creates an immutable record of that recall, of that inference to the AI on the blockchain for eternity. And there's a lot of very practical reasons to do this, right? Anything in the world of medicine or law, anything that needs authentication and verification and validation would do, you would do this. Not to mention you can apply the algorithm to other elements because it will trace, right? It's like the super tracing algorithm. So this is brand new this week. Compute Portal and Flux Point Studios are joining forces. We've put out our press release. We're going to run the infrastructure for that algorithm, for that protocol.
Wow.
In the Compute Portal network.
Jerry's moving up in the world for sure.
Doing things, Rob. But I mean, that whole not knowing part about AI,
yeah,
trust me, it's coming to an end. You will know.
Wow.
It'll be verifiable and there'll be proofs to validate.
Yeah.
And records.
I got to get Nate back on so we can tell us.
He is, I'm so grateful for the role you played in that connection between me and I.
Yeah, I like Nate. He's a good guy. I met him at the Cardano convention that we were at in Las Vegas last year.
Yep.
Let's see. Here's a question. Is Rob and Jerry going to pull out now, or does he still believe alt season is coming? No, I mean, if we look at indicators, that nothing is saying to me like you got to start to take profits right now. I think those profits are coming. And I think, I've always said this, I always thought Q4 of 2025 would be pretty big. But maybe, well, there's no maybe. I mean, well, there's always a maybe. What do I know? We just did a whole video on like really bad price predictions. And the last one was me, and I showed you all my price predictions were wrong, essentially. So who knows? But historically speaking, this is where we're at. Does that mean that's what it has to be? No, but things like are pointing in that direction. Not everything. Anyhow, but Jerry, I'm not selling right now. What do you got yourself?
So I've said it on this channel several times. I'll say it again because it's what's happened. Of my 79 assets in my crypto portfolio, 70 of them are ready to be sold. In other words, I've gone through the process of unbonding proof of stake protocols that had bonding periods to them.
Yeah.
So I'm foregoing what used to be a yield stream for readiness, right? So I have a bag of X token that's no longer bonded. When it hits the price I want it to, I will liquidate it.
Sounds good to me.
Now, keep in mind, I'm very lucky in one hand and very stupid in the other. I had a $1 million portfolio that I screwed up and took $780,000 in a loss. So I have that loss to write off against all of the profits that I'm going to take as I liquidate those 70 or so altcoins out of my portfolio as they rotate out. So on one hand, ouch, and on the other hand, yay, no capital gains.
On one hand, ouch. Jerry, how does that feel to talk about that, like $1 million just down the tubes? Is it easier every time?
There's a humility. There's a humility that is much needed in my life, and it provides that humility every time I talk about it.
Yeah, it's like me talking about Voyager and Celsius. It's like it just has to be done. It is what it is.
We're all going to make mistakes. That's the point. This isn't really a science. It's more art. And we all color outside the lines sometime. That's
very true. Meme's got a question. Do you guys remember this one, Power Ledger? Whatever happened to Power Ledger? I think it was an old project back in the days. And I remember there was one called Power, and that one was supposed to be like the next big thing for decentralized electricity. And I don't know how it's doing, but maybe it's just one of those that didn't move forward. Crypto Steve-O, thoughts on the perp dex narrative moving forward? And this is, we're talking about like Aster, and we're talking about Avantis and a couple other ones. I think we talked about this 2 or 3 days ago or so. And one of the things that struck me about Aster, well, first of all, it came out that everybody knew that CZ Binance was involved, but they didn't really know what it was. And then he went on a Spaces and said, okay, I'm an advisor, and I'm, holding these, or I'm making some recommendations to the team. They're really young and they're a great team, but this is what we're doing. And I took a look at it as like, I think he's playing a bigger role than that, probably, because in 2023, I don't know if you guys remember, because of AML and KYC, or money laundering, anti-money laundering laws, CZ had to go to jail. And he was probably pissed off because he's like, you know what? I'm just doing my job here for this centralized exchange, but the American government can reach across and get me for this. But he did it voluntarily, right? And I'm sure he's not happy. And on this go around, he didn't create Aster. He didn't he wasn't part of the genesis that we know of, but he's going to move that in the same direction. He even tweeted out, he said that actually Aster, which is a decentralized perpetual futures market, is competing against Binance, but it's helping the BNB coin. And I thought that I had to take a step back. I'm like, I wonder how they're doing right now as far as volume, like we talked about, volume. If you go to DeFi Llama and just put in perp, and it'll come up with all the different things you want to take a look at. TVL, fees, revenue, market cap, but it says perp volume by protocol. You'll notice that Aster's been around for 8 days, I think, 9 days, somewhere around there. Hasn't been that long. And as far as like 24 hours, in the last 24 hours, it says it made $42 billion. Lighter made 5, and Hyperliquid made 4. And Hyperliquid has been around for quite some time. The problem with this one, though, and someone pointed this out, see if I can find it. They said, but Rob, what about the 5 wallets that control like 90% plus of the circulating supply or of the supply itself? And that's an issue by far. But I wonder, this is where it gets interesting. I wonder how much of that is actually owned by CZ or a subsidiary of CZ. And, I don't know. Jerry, what do you think about this? Have you been following this or all?
Yeah, I think we're going to see a lot more activity into decentralized DEXs over the next X amount of years because it just makes sense. It makes sense on a lot of levels. Automation, code when verified and audit is literally almost bulletproof, right? And so the trust that comes. If that code is audited and verified, then the potential for some employee to leak data to a scammer and get your $700,000 worth of crypto on your wallet that you turn over to a lot of those things go away.
Yeah, a lot of those things go away at some point. Well said. There was a question for you, Jerry. Oh no, there was a response. Remember you asked about jobs and switching of markets. Oren says, my friend went from a lawyer to a software engineer because markets are changing. That's crazy. But I wonder, like, if you're a software engineer, how good do you have to be? Because that's what AI is going to start to do, right? So you got to be I would assume a reasonably good software engineer, and then just have AI do the work for you, or be your own boss.
You see a lot of supplementation, right? So the software engineer will use tools like AI to collapse workloads from what might take 8 hours to 2 hours or an hour. And then you got the other idea. The other element is, if you understand and use a tool, maybe you can build a tool that becomes your new business. In other words, by becoming a software engineer, he builds some piece of software that goes out and does the work. He no longer works. He just manages his software.
That's what we're trying to do with these. We're working with Indigo Protocol and Chakra to bring together an AI agent for our Airbnb short-term rentals. Because when you stay at an Airbnb, you always got questions, right? And some people have, how would I say this nicely? They have more exuberant questions, even though they may lack the understanding of basic protocol of how to look for things. That's a good way to say it. And they'll just bombard you with questions, and we're like, it's in the files we sent to you. So now, instead of them bothering or getting some answers that may be a little bit laggard because we're out doing things, they can just have the AI agent, and not some crappy chat bot, like a real AI agent that's like, show me the picture where you're at and I'll help you what it is. Or, this is exactly the code that you want to put in this specific sequence, or whatever it is. That would be the big thing. And I can see that. Okay. Do you know when the next possible rate cut is?
So from what I gather, there is a slight, we'll say more than slight expectation that there'll be another quarter BIP, in other words, 0.25% cut in October.
Okay. Jerry, it's going to be. You think it's going to be 25 basis points? You're going to go with 50, like I'm going to go. Come on.
You can go with 50. Here's what I'm going to do. I'm going to stay mute on the topic. I made a prediction some time ago that I didn't think a rate cut would happen in the fourth quarter of 2020, or sorry, in the third or fourth quarter of 2025, simply because I didn't think the economy was there yet, despite the president and the administration pushing for a liquidity cycle. I thought the Fed would hold their ground until at least quarter one of 2026. And in September 17th, they proved me wrong, right? They came and cut a BIP. It helped the market a lot. And then the market retracted. Remember, we saw that beautiful little boom, right? We saw that little pow. And then immediately, it seemed within 3 days, then the compression came back again. And all the gains that were gained after in the crypto market, not in the S&P, but in the crypto market, all the gains that we got have now compressed and they're gone.
Yeah, we saw a powerful
trading. It was a trading opportunity. Now the pullback is an investment opportunity.
Very true. Very true. Investment opportunity. Black Cobra says, just continue to work on your pullout game, so you'll do that when the time comes. Good one.
Yes, sir.
That's
I'm kind of okay. Thank you. The innuendo is running rampant in my mind right now. I'm sorry.
William says it right when he hears super cycle, run for the hills and sell now. Well, I wouldn't say like sell now, but I'm very cautious about not taking the profit, especially on altcoins. Like, I have very little faith in most altcoins out there that they're going to make it, because they're just all businesses. That's really what it comes down to. There's a difference between Bitcoin and all your altcoins. It's just vastly different. First of all, altcoins have CEOs. Altcoins have heads of whatever, and Bitcoin just Bitcoin. There is no like, I want to talk to the manager type of thing, and it's just out and automatic. But these altcoins, I'm going to be selling them because, like, I did my job. I bought, I held, I carried them through, and then off I go. Jerry, are you going to sell any of your Bitcoin though? Or are you going to keep it all?
The idea is not to sell Bitcoin, right? The idea is to leverage Bitcoin, no different than somebody would leverage a home, right? Very accepted practice, specifically in Western developed nations, to take equity loans. So in other words, as your home appreciates, you capture that equity without releasing the underlying asset. That process is what I'm going to do with my Bitcoin. My altcoins are going to get collapsed to a small number of just a few that I want to keep. And that money will hopefully develop a piece of real estate for me, and I'll have a real estate portfolio and a crypto portfolio, and then my capital market portfolio. My Roth 401. My Roth IRA, my 401k, my personal Schwab account, that type of thing, and I'll just manage those three asset pools accordingly.
That's the way to do it. Yeah, manage it accordingly and do the best that you possibly can. Go from there. There was, let's see, Aristotle says, what internet providers are Rob and Jerry using? I was going to ask about Jerry, because Jerry, you've had some spotty service, and now you're looking pretty good over there in Costa Rica.
I'm telling you, Starlink has been a life changer for me as it pertains to interacting on the internet in Costa Rica. Starlink is phenomenal down here. I don't know about the rest of the world, but I love it. And I pay $60 US a month. Plus, you had to buy the system. So the whole system cost me $750 US delivered. I installed it. I pay $60 a month. Oh. And as long as there's electricity feeding that dish in that router, I've got quality, like 110 down and 30 up constantly.
Okay.
Incredible.
Yeah, $60 a month isn't too bad. I could definitely do that. Christian says that Rob is dangerous. He has a trustworthy baby face. That's why I do the rules, which is the very first one, which you can't see right now, which is do your due diligence as much as possible. And the next one is everything's a scam until proven otherwise. That's why I put this on the second one. That's right. is because, see that one where it says 100% scams? That just was a reminder, like, even Rob could be a scam. Rob could be some deep agent that is working for, like, BlackRock in the background, which DMs are open. I'm just saying, BlackRock, if you want to pay, I'll do it. And if I did that and I was here to hype you up, then you can't trust me. You got to do all the research that you possibly can. Let's see what else. And Jerry, we're coming up on an hour. Jesus.
No way.
Yeah.
These Sundays are really good for me personally. Thank you.
Mary says, unlimited phone and internet, T-Mobile, $150 a month. It's not bad. And then lastly, we'll take this one. Pizza says, pizza with pineapple, carrot, bananas, the worst combination I could possibly think of. He says, Rob, can you show social risk on ITC? Yeah. This is the last time though, guys. I gotta stop showing all these insider secrets, as I do it like every day. But social risk. What we're looking at is the crypto risk indicators. We talked about this yesterday, and I like this one because it's it condenses everything, like Bitcoin risk, logarithmic regression, fear and greed, MVRBZ. I wish they would do like a pi cycle top one too, but they haven't. Anyhow, social metrics are at 0.00. And what is this? Actually, what is this? Let's see, hold on. Oh, here we go. It takes a look at YouTube subscribers, views, Twitter followers, layer ones. We're in the toilet, quite honestly, as far as social risk. I think retail is, Jerry, what do you think of this? I was thinking about this yesterday. What do you think? Do you think that retail is getting squeezed out and it's just institutions kind of coming over like the big guy on the block? And it's like retail front ran institutions like one of the first times in history with Bitcoin and digital assets. And so retail came first. Now institutions are here. We know they're here. We just take a look at any ETF. Are they trying to like just push us out and then later get retail back at a much higher valuation? That's what it kind of seems like some days.
Okay. Institutions have a much larger pool of capital to work with, so therefore the acquisition of assets is always going to be skewed towards the largest pool of capital. Now, with that being said, remember we briefly talked about demographics earlier in today's show. As the rotation of who is a retail investor, right? Who is a retail investor? For a long time, it was the baby boomers. Gen X, millennials, nobody was investing. Over the last 10 years, we've seen a much larger proportion of these demographic cohorts that didn't participate in this, we'll call it investing industry, are becoming investors, right? And they have to. The monetary policies around the world are collapsing the value of our currency year over year over year. You feel it. Yeah. It costs more every year, and your earnings are not going up to match the cost increases, right? So we're all feeling that. So people are looking for new ways. They have new ways to learn. YouTube is an incredible source to learn information. They find people like Digital Asset News. And so we're seeing this rotation of more and more retail. So although you'll call it the savvy investor or the professional investors have more capital, the retail cohort from a population standpoint or volume is growing. And as we deploy more capital, we will take larger and larger pieces of that pie. And then you have the wealth transfer. So as the baby boomers die and they have portfolios that are 60-40 traditional real estate bond stock deals that roll over into the children, you and I, the generations below us, how they manage that wealth has a very high likelihood that it will be differently than the way the predecessors managed that wealth. Therefore, there'll be a rotation into new assets.
I like that. Yeah.
Bitcoin.
Well, we'll see how it goes. Gold's beating us so far this year. We'll see if we can catch up at the end of the year. But Jerry, we're at an hour. So everybody, I don't want to keep you that long. So
Ciao.
thanks for stopping by. Like and subscribe. Follow Jerry. We'll see you guys next week. Adios.